Hello and welcome to this July 20th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring a small company. We haven't really been looking at too much on the long side lately, mostly because we're very cautious of the market. But this is a small company, and it just looks like a kind of an individual type of a trade setup. It is only a little more than a $200 million company, and it is in the healthcare space. So very, very aggressive stock. No question about that. Not for everybody, that's for sure. But if you like to play the small cap stocks, it is kind of interesting. You can see that the stock actually came down on Monday and put in a doji. We were sitting up at about $1.85 at the open. On Friday, came all the way down, and individually on Monday, intraday, we got down as low as $1.43 before reversing and finishing at about $1.55 or so. Notice the prior closing low in the near term was at $1.54, so we did have a test of support. We went down below it intraday and then reversed, notice, on some very heavy volume. So we got this reversing candle. We did get it on the big volume. That many times will signal a short-term bottom and is something worth at least considering. Longer term, you can see that we made a big breakout back here in March, taking out the late February high at about $1.35, $1.34 in that neighborhood. On that breakout, we continued moving higher, ran all the way up to 260, and really from back in the early part of January, we were down close to 80 cents, ran all the way up to 260 by early April. So just a little more than 3 months, the stock more than tripled. So it has needed a period of consolidation. I think that's what we've gotten here recently. But no question, this is an extremely risky stock because it is small and because it is in the healthcare space. So again, it's not for everybody. We don't even feel particularly good about going long the market right now, but this does look like a more specific type of a trade here. You can see at the top when we put in the highs in April, May, we had the two highs just up. First one closed close to 250. The second was a little above 250. Notice the MACD had turned much lower, so we had a negative divergence in place. That created a lot of the short-term weakness that we saw. We had one bounce and then another move back down to test this support level. So it looks like an interesting area. If I was going to play it, I might consider taking a very small piece at the current level. If you get down below $1.40, you might take a look at another possible entry to average in, maybe get an average somewhere in the neighborhood of $1.45. I think on the stock that would be a pretty decent entry, but just realize that this is quite a risky proposition. It's not for everyone, and I would not put money into this particular stock that I wasn't willing to risk. So this is definitely risk capital. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.